This is how to stack gains on top of gains. Well, it seems so obvious to me, but then I've been doing this for a while. But if I turn back the clock to when I first started using this strategy, I can understand the hesitation. Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants, and developer of the Tax-Free Cash Growth Warehouse Strategy, and author of the books about the TFCGW strategy.
I'm Amanda Cox, Senior Strategist with SC FSIC.
We're going to explain here how to exploit a couple of the greatest advantages the Tax-Free Cash Growth Warehouse Strategy provides. Namely,
how to stack gains on top of gains and the TFCGW strategy.
You might want to take notes because as simple as this really is, it's just plain foreign to most people. It's not something that you learn in school or from anywhere else for that matter, unless you happen to be born into a particularly financially well-educated family.
Or you go hunting for financial gems, as you happen to be doing right now. So good on you.
Good on you. Okay, so what do we even mean? Stacking gains on top of gains. Well, it's rumored that Albert Einstein said compounding interest is the 10th wonder of the world.
Now, compounding interest is where interest is earned on interest that has previously been earned. So you have money that earns interest of, let's say, 5%. And let's say you have $100 earning 5% interest. When the interest is paid to your account, you now have $105. And that now earns 5% interest. The next interest payment you'll get will be $5.05. The previous $5 of interest has earned 5%, as well as the principal of $100.
And that is compounding interest. Now let's stack it. Let's say you have $100,000 in your tax-free cash growth warehouse account. Excuse me. Or TFCGW for short. Now, you have an opportunity to invest in a property that's either undervalued or like in a distress sale, or maybe it's an older home that with a couple of minor improvements will become marketable at a good profit. While your money in your TFCGW account is earning 6% compounding interest, here's how you stack your gains. You leverage that cash value for a loan at 5% simple interest and buy the property. If it's a distress sale, you simply put it back on the market at the actual value. Or if it's a fixer-upper, you make the improvements, put it back on the market at the now current value.
Now let's say you bought the property for $85,000 and its resale value is $100,000. You sell the property for market value, and as a result, you've gained $15,000 on your investment, or 17.65%. Now, of course, you have to pay tax on the gains, so let's say that tax is 25%, or $3,750. Your net gain on that investment is $11,250, or 13.23%. Net gain. That's pretty darn good.
Yeah, I'd say so. But wait, the whole time you had that leveraged loan out, the $100,000 you had in your TFCGW account was also earning 6% compounding interest. Now there's $6,000 you earned on your money, and all you did was leverage it for a loan. Yes, the loan cost you 5%, but the loan was only for $85,000. So even if you had the loan for a full year, interest was just $4,250, and you earned $6,000, or a net $1,750, which is 1.75% on your $100,000. And here's the really good part. You pay zero tax on the gain from the interest paid to your account.
But it's even better than that. And that's because you also get to take a tax deduction for the interest you paid for the loan, saving you $4,250 on your income tax.
Yeah. So let's see how this all stacks up. You made 13.23% net gain on your property investment, plus 1.75% net gain on your money sitting in your TFCGW account, which at the same time you used for the property investment. And you earned a $4,250 tax deduction in addition to the actual net gains. That's a 15% net gain overall, plus a $4,250 tax deduction, for a total of $17,250 in gains. Now, I don't know about you, but I'd say that stacks up pretty darn well. We used a real estate investment here for our example, but it could just as easily be any other investment opportunity that presents itself to you.
For example, if you have a business, whether it's a full-time business or a side hustle you do, such as food supplements or cosmetics, whatever it may be, in that case, you invest in products that you resell. This strategy of stacking gains applies exactly the same way.
You can see 10 different examples of using this TFCGW strategy to stack gains in my book, Tax-Free Cash Growth Warehouse, Nuts and Bolts. And it's available on Amazon.com. We hope that you found a lot of value in this simple explanation of applying the TFCGW strategy.
We also hope you will subscribe to this channel and post your comments and questions here.
Also, if you haven't yet, do yourself a favor and watch our free webinar, How to Become Master of Your Financial World, at the link in the description box right below here.
Aloha and mahalo for watching.